The rally on Wall Street continues while Bitcoin was left behind on this one. So let's jump in, take a look at what is going on. And right now we see the Dow up 1.17%, S&P up 1.6, NASDAQ up almost 2% at 1.97. And what is going on? The Treasury, 10-year Treasury, took a little bit of a break today. So stocks rose as Treasury yields eased from their recent highs as investors weighed the cumulative impact from Fed hikes already implemented and digested this week's comments from the central bank. So the markets were pricing in a 50 basis point rate hike, and the Treasury yields were off the chart, the 10-year and the 2-year, all on the fears of recession. So everything took a little bit of break today. And the stock market is very sensitive to bond yields at this point and looking for some respite to recent upward moves in yields, said Young Yu Mao, BMO Wealth Management Chief Strategist. There's a nervous anticipation to upcoming data releases for jobs and inflation after the difficult readings last month. The market is unlikely to have sustained traction until data points resume a cooling trend. All of the major averages notched a win off of the back of the comments from Atlanta Fed President Raphael Bostic, who said he thinks that the central bank can keep its interest rate hikes to 25 basis points. Again, the Fed is still of the mind that inflation has peaked and that they can get it down to their 2% target with continuing with 25 basis point hikes versus 50 basis points, although most of the Fed members that have come out have said 50 basis points is definitely possible. None of them have said that it is likely. They just said they're open-minded about it, they're data dependent, and it's possible. So the markets are rebounding a little bit on the fact that it might not be a 50 basis point rate hike, it might only be 25. The Fed is still saying and thinking that they can avoid a soft landing, although a couple of Fed members, or at least one of them, has said, Neel Kashkari, that he doesn't see how that's possible. At the end of the day, the Fed funds rate has to get above the rate of inflation. Inflation's at 6% still and climbing. Fed funds rate is not quite there. They initially targeted 5.5%. One of the key statements at the next Fed meeting in a couple of weeks is going to be their forward guidance on terminal level of the rate. And a lot of people are saying they need to get it to 6% to get inflation down. And in the past, inflation has never been tackled unless the Fed funds rate was higher than the rate of inflation. We're not there yet. Prices are not coming down on really anything. So a lot of work to do there yet. So here it is. The Dow got a nice little bounce today, or last couple of days here. NASDAQ, same thing, couple little bounces there. S&P, a couple of good days bouncing right off the trend there. And let's take a look at the VIX, again, dropping down to those levels where you can expect a reversal, probably on Monday. The Dixie took a little bit of a break today, and the 10-year took a little bit of break off of that almost a 4.1% level, dropping all the way down to 3.9. Still pretty high, and will most likely continue the journey to test the upper range as we get closer to the Fed meeting. And Powell will be out next week testifying to Congress. So we'll start to get a indication of what their thought process is, or at least what his thought process is. Here's Bitcoin losing a little bit of momentum today. A little bit of that Silvergate Bank worries out there in the market. Long liquidations here, losing the trend line, the major downtrend on Bitcoin. So like I said yesterday, right now that's what we're watching to see if it can get back above this trend line, or if it's going to just kind of continue and just bounce along underneath this trend line, if that trend's going to hold it down. And then the other thing to look at is the moving averages. Lost the 50-day, and we talked about that yesterday in yesterday's video, that Bitcoin really needs to be above that 50-day, working its way back down potentially to test that 200-day moving average, which is currently around $20,000. Of course, the lower price goes, the lower that average goes. Then the real question, the real test that is yet to come is, will the bottom hold in Bitcoin, this lower range that was put in at 15.5, or is it going to go lower? And as you can see, the bottom of the Gaussian channel is presenting as resistance currently for Bitcoin. This is on the weekly Gaussian channel. I know there's some 5-day Gaussian channels that show it up in here. I mean, if you go, the more you back down, the higher it goes into the Gaussian channel. I like to look at the weekly because, that's what it is. Weekly closes. And, the closest thing you can go back to with a situation like this is 2014, when it rejected off the lower end of the Gaussian channel. It went back down to test that low again, dropping about, well, from that level, let's look at it. where it rejected, dropped about 40%, I believe it is. Yep. So that was about a 40% drop. So if you go to Bitcoin where we're at now and drop it 40% from where we currently sit, let's see what that looks like on this last rejection here. 40% puts you right back around 15,000. So like I said, the probabilities and the most likely outcome is that Bitcoin will potentially come back down and test this bottom to see if that will hold. And then we will have some answers at that point. And again, a lot of it's going to depend on what's going on in the economy, the markets, as a whole, and the global macroeconomic situation. So these are the things I'm looking at, and I will see you on the next video.